Hey guys, and welcome to another edition of Stock Talk. Today is April 15th at 6:21 p.m. Eastern Time. Now, before we get started, I want to thank everyone who's been incredibly supportive with all the subscribing, the commenting, the sharing. All of this, I feel like, is instrumental to not my success, right? I mean, I'm benefiting too, but it's to our success. I feel like as this channel grows, I'm trying to help you guys as well in terms of technical analysis and just making quality decisions, right? Making quality, disciplined decisions. And this is just one of the things that really I value, but also I feel like this is really encouraging for me to see you guys benefit from it. And that's the purpose of the channel. So let's get started on the SPY, which is the S&P 500 ETF on the 180-day chart. This is using the Thinkorswim platform. So we left off last week on Thursday night where we saw that it was testing the resistance. Now, where's the resistance? Well, the resistance is at 266.80 or 266.90 on SPY. And we said that there was a possibility that it could go over on Friday, but we got to be careful because we need to see confirmation of the break over the resistance in order to say, yes, we have effectively broke the resistance. So what exactly happened? So on Thursday night, we knew that Friday earnings, bank earnings were coming out, and that we knew that people were bullish on those earnings because people had high expectations. And in fact, JP Morgan and other banks did beat expectations. But what happened? So you guys want to be very cautious because pre-market, we broke above the resistance line. But once again, we want to see a confirmation, which means once it breaks above, this is probably a good time if you want to take a bet in terms of short selling these ETFs, SPY, TQQQ at that point. Why? Well, the reason is remember that it has to come down and retest this support many times. So if I can see a bounce and then it goes back and then another bounce and it comes back up, then you could probably say, okay, we're on the uptrend. But if you take a short sell right here, I mean, you don't have to do it, but if you took a short sell right here when it's above the resistance line, then there's a good chance that it'll come down because you can set your stop loss at 267.87. That margin for loss is really not that much, but the margin for gain is significantly more because we can see that in the past few days, it has never gotten above this resistance area. So what exactly happened during pre-market? The earnings came out, we broke above the resistance, and we had a huge sell-off right when market opened. So we had a sell-off, we slightly recovered at the bottom VWAP down here, back to around the middle VWAP, and then we had another sell-off past 1 p.m. before it recovered to 265.15 at the end of day. So what am I looking for in the near future, right? We got to be careful with what we're doing because like I said last time, we don't have to take a trade right now because we're at a critical juncture. The markets may go up because you guys can see we've already been squeezed in by this triangle, right? And actually it's kind of just going sideways, like just this resistance has been there with these two SMA lines converging down the resistance. So it's having a hard time breaking the resistance. But what do we see? We see that it's able to keep at the resistance. This is a slightly bullish short-term trend because we see some actually consolidation at the resistance, which means the markets are ready, it seems like, to have a push upwards, right? Because every time, and let's take a look at Friday, right? Every time it goes back down to the support shown by this slanted ascending triangle line, it bounces off. Look at here, it bounced off. And then we close down here. So what does that mean, right? This means that this ascending triangle pattern might not be there anymore. But what's more relevant is this resistance line and that this bullish pattern is beginning to emerge. Now, if we do cross that line tomorrow, then what can we expect? Well, we can expect a resistance around 268 because this is where the 200 SMA is. You can see that in previous highs, this has been a solid resistance area down here, right? Here's the resistance right here. Here's the resistance right here. So just looking at the trends, this might be a resistance area. Now, another number to keep in mind is around 270 271. Why? Because this was when we had a breakdown, and this started the downtrend, right? So 271 might be a potential resistance again. And then, of course, looking at the big picture on the 180-day, we're making this higher low. So if we do get up here, not saying that it's going to get there tomorrow, because it probably won't, but in the next few days, if it does go above, this would be the ultimate test, whether we are still in a long-term bearish trend or long-term bullish trend. So looking at the markets right now in the futures, we in fact do see a spike above this resistance line. So we do see a spike above, but again, futures can change overnight, and let's just not kind of say what, no, we don't have to predict based off of what might happen today, but so far it looks like we're trying to break above that resistance. We're continuing the bullish trend. So I want to talk about a little bit about my position, because I am still in the position TVIX, and here's the pattern that I still notice, right? I'm in TVIX, but take a look at what's happening. We broke. So if we make a slanted line that goes from this way to this way, right? We broke under. Now, think about this. On Friday, the Dow went down 122 points. What happened to volatility? It went down 7%? Does that make any sense? It doesn't. Why? It's because, again, that confirms a bullish trend on the markets. So why am I in this position? Because, again, I talked about this last time, because this is my insurance. This is my leverage. My long-term trend, in my opinion, is still going to be going down, because that has not changed based off of SPY, right? We said there's a resistance on the 200 SMA, there's a resistance at 270 and 271, and there's another resistance around 273. Until we break above this line, we can see a possible downtrend again. And you guys can see that. What kind of trend is this? Well, this is almost like a if you guys take a look at the 1 year chart, right? What does this look like? Down, up. What's going to happen next? Well, to continue that, is the bear flag pattern, it's going to keep going down, right? So we're not sure when it will make that turn, but the possibility of making that turn in the long term is still higher, because we are still in the bearish pattern. So I'm not too worried about my TVIX position, because at some point, in my opinion, the stock market will come down. Now, if it does go up, then okay, we're in a bullish trend. I'll leave the TVIX position, and then I'll go back into other ETFs, such as TQQQ or UDAO. Those ETFs do follow the markets accordingly. So another thing I want to talk about is we always look at the ETFs during the weekend. So let's take a look at the 4/CL, which follows the crude oil futures. We talked about this a lot. We talked about this in Ricky Gutierrez's group, because like a lot of people in the group have taken a position on DRIP. Now, DRIP is the inverse of the crude oil futures, generally speaking. So when crude oil futures goes up, DRIP goes down. And a lot of people have been worried, because look what's been happening. Well, there was a resistance, right? Around $66.40, but it broke above it. And in fact, it stayed above it, right? So what does that tell us? It actually tells us that crude oil is on a bullish trend. It doesn't want to come down. And, you know, one thing to keep in mind is, look at this 20 EMA, right? This 20 EMA. I was looking for a retest of this support. Did the retest of the support happen? Yeah, it actually happened on this day, but it just bounced straight up. And let's think about it. When the futures, or whatever stock or ETF, starts moving sideways, okay, there's a potential that it could come down, yes. But what exactly is happening if it's bullish? Well, the 20 EMA line is actually getting closer when crude oil futures are consolidating. So crude oil isn't falling, it's consolidating, and the 20 EMA line is getting closer. So what does that mean? Well, it can push up once the 20 EMA starts getting really close, because we got the consolidation, then it pushes further even higher. So I'm still in the position DRIP, and you guys can see that DRIP ended the day at $9.91. We lost almost 5% again. Taking a look at DRIP, what are we looking at? we're seeing a descending parallel lines. Lower highs, lower lows, broke the channel, and then here we go. We're just continually going down. So this is why I believe that we never even got to a retest of this new resistance, right? This resistance area. We probably can't even call this a resistance area anymore because we can't even get up there right now. So you might be asking, well, why are you still in drip? Like, are you like doing some counter trend strategy? Well, let's take a look really quickly at drip. Drip's low 180 days is $9.31. Now, I'm not saying that this low will hold necessarily, but we are at a 180-day low, and we could see a potential bounce here. Recall that I bought into drip at, I think, $10.30 or 31 cents. So, you know, why sell it now when we're this low, when there's a potential for a bounce, right? So for people who are in drip, again, I would be really cautious. For example, if it does break this 931, and then if you set your stop loss at maybe $8 or something, you know, that's a huge break of trend. And if you're comfortable with that position, you know, by all means take it. But if you're not comfortable, because, you know, going from $10.30 to like $8.30, that's $2 per share. So you guys evaluate the risk ratio reward, risk reward ratio, and you know, I'm still in it, but that's just me, right? You guys don't have to follow my trades. That's just how it is. All right, so that is drip. So again, looking at GUSH, take a look at GUSH on the 180 days. What exactly is happening? Well, we can see that GUSH is significantly above its 20 EMA, but as long as crude futures keep pulling up, GUSH will probably start consolidating and continue to pull up as well. And this is influenced by a lot of factors, maybe the news, Syria, oil reserves, and the amount, the volume. So again, just be comfortable with your position. That's all I can say in terms of how much you've invested in those. Okay, taking a look at /GC, which follows the gold futures. So gold, once again, is in this middle area. So I would question you guys, do you guys really want to invest in gold right now? Well, you can't really see a trend right now, right? The trend is that we've seen a support at around 1325. We've seen this downtrend that got broken when gold spiked all the way up to retest its resistance area. So if you guys take a look, that even though this resistance area, this downtrend, became this support this time around, the margin for profit to loss or whatnot isn't there for you, in my opinion. Because unless it falls to this area where gold can bounce, or if it falls to this area where gold can bounce, I'm not going to invest into the ETF JNUG, which follows gold, because there's no solid pattern. So let's take a look at JNUG on the 180-day chart. So here's JNUG, right? It was making this ascending uptrend pattern, and we said that this is a resistance area, and actually retested this resistance right here. So are you going to buy into JNUG? No, not right now. I mean, it is overextended and it's at its resistance. So why buy into JNUG? Now, one thing that you could do, but I don't recommend against it because of gold futures, is you could go into, once again, JDST. JDST is the inverse gold at 3 times leverage. And taking a look, right, we're at the support. So what kind of trade could you do? So if you really want to do an ETF trade, what could you do? Well, you could have bought in at $47.50, right? That was pretty much where we were at on Friday, and set your stop loss at $46.07. What's the margin of loss, right? The margin of loss is maybe around 2%, but the margin of gain, should JDST just bounce back up here, is like 5%. Do you see where you guys are getting at? So what am I looking for, right? My trading strategy is not necessarily crossing the EMA line. Look, like for example, once it crosses the EMA line, right, when it's green, your potential for it's really difficult to catch this margin of profit versus if it just starts dropping from the EMA line. Like it could cross and then, oh, you get in, yeah, but then when do you know you're going to exit, right? It's hard to tell. But if you do it at the bottom, right, and it starts bouncing up, then you can set your stop loss that's really tight, because if you set it tight, that's a break of pattern, and you can You say, oh, okay, I took the loss because the trend broke. But for the margin of profit, if it does go up and follow your plan, then it could be great, like 6-10%. So why do you have to kind of like look for an uptrend? Maybe this works better for stocks, but in terms of ETFs, especially right now in this volatile environment, it's a little harder playing the EMA trick where we try to buy in when it's on an uptrend. All right, so that's my /GC analysis, and let's take a look at /NG, which tracks natural gas futures. All right, look at this pattern, right? Natural gas was getting edged down by this descending triangle pattern. We had a support at $2.66, and then we see a descending pattern. So once it broke above, what could you have done? Well, you could have bought in, right? Because this is a break of pattern. You could have gotten into the ETF UGAZ, which follows natural gas, right? So once you break, you could have written this up. Now, where are we at right now? Now, you guys want to be really careful because this, what kind of candle is that, guys? That's a possible reversal candle. So why is this a reversal candle? Look, so I'm going to draw in this line right now because this, as you can see, was the resistance last time, right here, right? And this is a reversal candle. So what could you potentially go in? This looks like a, actually a much better buy for DGAZ. So looking at DGAZ, right? Okay, so we had this ascending triangle for DGAZ, which broke. So we're going to remove this because this is no longer applicable, right? But we see a support right here. So DGAZ is looking potentially better than other ETFs. This is something I will definitely follow this week, right? These are the two support lines. So if I see a bounce tomorrow for DGAZ, say it goes to $27.80, you can buy in. Or if it starts going down, like for example, /natural gas is actually moving up right now, and it in fact does test this this resistance line at $27.14 and starts bouncing tomorrow, can buy in at $27.30 or something like that. Where do you set your stop loss? Well, you can set your stop loss down here at $26.89. If you want to be a little more liberal with your stop loss, you can set it at $26.76. The margin for loss, okay, 2%. The margin for gain, at least 5% or more, right? So that's the way to kind of look at risk to reward ratio. All right, guys, that's everything that I'm analyzing today. Thank you guys for watching this video. Like if you like this video. Keep those comments coming. Keep those subscribes coming. I mean, I don't like get high off of these subscriptions, but I do find it rewarding to see everyone coming to the channel, and in terms of everyone learning together, I feel like that's the most rewarding thing for me in terms of producing quality content. So I will see you tomorrow, Monday, and happy trading.